Hello, everyone, and welcome back to another episode of the Property Investment Australia podcast. I am one of your hosts, Lachlan Vidler, and I got right opposite me the smiling assassin, Will Sanchez.
How are we?
Good, mate. How are you?
Yeah, pretty good. Excited about this episode.
Yeah, bring some good energy to it. Got a good chat to be had.
Yeah, some gold nuggets here. I can see.
Some gold nuggets here.
I can see.
Yeah, we're gonna pan for gold. See what.
Don't give it away. Don't give it away. Don't give it away.
No, I'll give it away. I'll give it away.
All right, cool.
Can I give it away?
Yeah.
All right.
Go for it.
All right. Well, today we are going to be talking all about how to spot emerging property markets before everybody else sees them.
Oh, are you kidding? That's what everyone wants. Talk to me.
The golden nuggets, right?
No,
the golden nuggets.
You should have told me before starting the episode.
Yeah? Oh, you had no idea. You had no idea.
Come on.
Nah, guys, look, we got a really good episode planned. We're really excited about it. It's we want to have a good chat about this because it's a hot topic, right? Like we're well into the swing of the new year, and people are making moves. Like I'm sure you're seeing it. I'm seeing it as well. Like sentiment's good. People are making moves. People are now making sure that they don't repeat whatever it was that they did in 24 that they weren't happy with, and they're trying to seize 25 and really push themselves forward. And for most people, that's that. They're trying to buy their first, investment property, or they're trying to add to something that they've had for a little while, but they're just not happy with where they're at and they want to keep going.
Yeah,
so,
I think that's the buzzword for the moment.
What?
Sentiment.
Yeah.
Yeah. I did a couple of interviews not long ago. I think one for Sydney Morning Herald, the other one for the Daily Telegraph.
Oh,
in both.
Do we have a celebrity in the house here?
It happens every now and again.
Being a celebrity or the interviews?
A bit of both. Bit of both. But I don't talk much about these things.
No, but tell everybody all about it, though.
Yeah, well, it just happened. Right?
It just happened?
No, just because you touched on sentiment.
Yeah.
Both interviews were around sentiment.
Yeah, okay.
So both of them asked the exact same thing. What's happening with
happy?
The sentiment? Well, yes. And they did a big piece with one of my customers, which was pretty good. They went to their property because first home buyers, they took pictures. It was pretty good.
Nice.
Pretty cool. Yeah.
I hope they gave you, they really sort of talked you up.
Yeah, well, yes, they did. But not much. I said, no, just keep it down there.
You're so humble.
I don't like the limelight. Just
humble.
Leave it on the client.
Leave it on. Well, I think if we then take that and then we start jumping into the episode, because I think you're right, sentiment is such a big factor. And when we're talking about emerging property markets, sentiment is definitely a factor in it. And I'm looking at what we've got written down, and we actually don't mention sentiment at all. But I think sentiment is probably what drives you to start looking at somewhere. It's sort of sentiment generally, but then also sentiment. And I guess sentiment does come from one of the points we're talking about, like on the ground, the on the ground perspective. But maybe before we jump in, like let's maybe talk a little bit about like what is an emerging property market and why you might want to invest in one, right? So same as what I find we say a little bit on here, there is no actual definition of this, right? It's more like characteristics or attributes that, in my experience, I've seen, buying across lots and lots of different markets, researching even more, little attributes and characteristics that I see on what you might define, is probably a better way to say it, what you might define as an emerging market. So can I rip in? Would you mind?
Please. I cannot wait.
Show some more enthusiasm, please.
Please, come on, start. Let's do it. Show us.
You know what? That reminds me. Have you seen the video of Tom Holland, Spider-Man?
Yeah, absolutely.
Have you seen the video of him and Tom Hanks where they're sitting on a talk show?
Yes.
And you know the one I'm talking about? Yeah. And it's like, please, sir, can I have
Norton or something? Is that?
Yeah.
Graham Norton or something.
And I think it was Graham Norton, yeah. And the clip where Tom Hanks is getting Tom Holland to like repeat this scene and like give more to it. So you reminded me exactly of that one. And you know what? Shout out to Tom Holland because big fan of Spider-Man movies.
Yeah, he's good.
He's good, hey.
Yeah, he's very good.
All right, so back on topic. We always get ourselves sidetracked. So back on topic. So what is an emerging property market and why might you want to invest into one? So firstly, what is it? So the way I think you'd typically look at it would be an emerging property market is a property market that has likely had limited performance in recent times, right? And what is recent times? I couldn't possibly tell you, right? Like
Mm-hmm.
it could be 5 years, it could be 2 years, right? Like property markets are constantly changing, but typically it's had some limited performance
But recent, yeah,
in recent time.
times,
Yeah, we're
yeah.
not talking over the last 20 years because
Mm-hmm.
markets cycle,
Yeah, I
right?
was
So,
gonna say yes.
but it's like, probably within the last, and it's hard to say because COVID, like that, not COVID, I'm always careful how I try and say this. That period of time moved a lot of markets just
Mm-hmm.
in general. So, um, that kind of skews it a little bit. But typically speaking, like it's a market that, for example, like right now, people just don't really think is maybe performing that well,
Mm-hmm.
or nothing's happening is probably a better way to describe it,
Mm-hmm.
right? So limited performance. And there's also, you probably have a perception that it is undervalued,
Mm-hmm.
right?
Mm-hmm.
And that's undervalued from both a rental side, but also, it can be from it's undervalued from like a capital growth side or a property value side, but then also it can and it often is also on the rental side, right? So those are the two really key things that I think are present when we're talking about a potential emerging property market, right?
Mm.
So
I'm thinking
you're
here.
thinking, all right. Well,
I'm
then ask
thinking.
me the question. Ask me why would you want to invest in one?
Oh, well, I was gonna say, is Kuma
Yeah,
an emerging market?
as in New South Wales.
Yeah, but the one in near Canberra.
Oh, look, you know what? To be really honest, you put me on the spot, and I probably couldn't actually answer. I'm not into the Kuma data enough.
Yeah,
But do you
because
think it is?
no, because I don't know.
Yeah?
I don't have enough data to support it,
Yeah?
but I am doing a loan there at the moment,
Like you're
and
doing a
I've
loan
seen
there.
yeah, and I've seen a few properties, and the
Yeah.
property prices are actually really good,
Yeah.
but they're not that cheap.
Yeah? What are they going for?
They're not that cheap. Well, it varies, right? So depending on the size of the property,
Yeah.
obviously.
Makes sense.
The year, yeah, well,
Bigger property,
o-
more money.
no, obviously no, but there's one that we had a look.
Yeah.
The property is I think 1,100 square meters.
Okay.
It's a corner block. It's pretty big.
Yeah.
I think it's going for like 1.1 to 1.2. I think it's about 4 bedrooms if I'm not mistaken, but it's a massive
wow.
property. It's a massive. It's so well built,
Yeah.
like really well built. But the prices range dramatically depending
Yeah.
on location
Yeah.
in the same city, right? So I had a look. You find properties for 300,000. You
Yeah.
find properties for like 1.2.
Yeah.
So that's why I'm asking the question. But there's some
Yeah.
really good properties, and the prices aren't that low.
Yeah. Yeah. No, fair. Look, like I said, you've put me on the spot. I couldn't intelligently answer about the market, but I do know like it's close proximity to Canberra.
Mm-hmm.
A lot of people travel through or near it for the
Yep.
snow.
Yep.
So it's sort of like it's got some of those attributes, but I think
Interesting little town.
yeah, exactly
Yeah,
right. And I
yeah.
think kind of probably like one of our recent episodes we were talking about like affordable property markets.
Mhm.
It's one of those things like you've really just got to get into the research. You've really
Mhm.
got to get into it to really unpack why. I personally haven't, so I couldn't tell you. But
Yeah, well, that's why I asked.
I unfortunately the encyclopedia of Lachlan and his property knowledge is it's not on the shelf today for Kuma.
Kuma.
But mate, I guess getting into like why you might want to invest into one, right?
Mhm.
So for me, there are typically a few key reasons why somebody might want to be buying into an emerging property market, right? And the first one is that if you buy into it when it's still an emerging property market, you're going to be able to feel the full upswing of that property cycle, right?
Mhm,
So
mhm.
you're able to buy in, you're buying in at pretty close to the bottom level of pricing, if not the bottom level. So you're going to get pretty much that full upswing. And obviously, like everybody wants to make money. So it makes sense. People want to take advantage as best they can of that. At the same time, because it's an emerging market rather than an emerged market,
Mhm.
you're going to have less competition. So,
Yeah.
like one of the biggest things that we deal with as a business and people deal with individually is competition. Like when you're in markets that are performing well, like people are going to go there. People are going to flock there. It's going to happen. So it means you're faced with more competition. So it means prices are going to rise pretty rapidly around you. You're going to miss out on lots of deals, which can be hard to manage and deal with sometimes. So you've got less competition there. And I think then the third reason why somebody might look at investing in one is it's a lot easier to also then build relationships. So one of the hardest things about markets that are really running hot is, agents, they just don't care.
Oh, when it's
Man,
hot, eh?
yeah, it's just
yeah.
like honestly, I don't have the time to talk to you. I don't care. Send me your offer, blah, blah, blah.
This is what you get.
Exactly right. So
Have
it's
a look
hard.
and see you later.
Yeah.
Yeah.
But if you're into an emerging market early, it's a lot easier to build relationships because even though there might be like it might be starting to stir awake, and you're starting to sort of see a little bit of something. Agents aren't smashed busy. They're trying to hunt hard for work because they're probably in the famine, not the feast.
Mm-hmm.
It's a lot easier to build relationships. So if you're looking to buy a property or buy multiple, you're gonna have an easier time
Very
building those
interesting point.
relationships. Yeah, you like that one?
Yeah.
All right.
It plays a big role in your search as well.
Oh man,
Building relationships.
100%. It's relationships to everything. I was literally
Yeah.
I was meeting with one of my team this morning. It was one of my property buyers, and her and I were having a great chat, and we were just sort of working out some goals for her for the year, and sort of just where she's at and what we want to do with her, and we were talking about the fact that she's been. We moved her into it's a market we've been buying in, but she was looking at some other markets, and we moved her into this market just to sort of change up what she's doing. And she was saying that like she's really found that like her ability to build relationships has gotten so much better because she's now done it a few times, and that those relationships, like she just gets sent off market after off market after off market, like she's literally drowning in off market properties.
Yes, something good about that
Yeah.
off-market topic that you just mentioned.
Yeah,
Every time your team sends me a property,
yeah,
I always look it up
yeah.
and I can never find it. It's always off-market. So
We,
kudos to your team.
oh, thanks, mate. We work hard. We got, like I said, we got really good people working really hard and finding those deals. But I guess other than talking about how great we are, or having you talk about how great we are, I think the point of what I was trying to get across was that relationships are so important in property because relationships equal access.
Yeah.
And if you don't have it,
100%.
if you don't have it, you don't have it,
And then next thing you see, you can sort of shave off, 20, 30, 50 grand off the price easily, right?
Yeah.
And
I was going to say easily, and I stopped myself.
but then you think about it,
Yeah.
right? So what's the cost or what's the investment to use a buyer's agent?
Well,
Do you know what I'm saying?
I mean, that is true. That is true.
That's how I look at it.
Yeah.
Because you wouldn't otherwise find the properties like the normal,
Yeah. Which is
normal-
very true.
Yeah,
Which is very
yeah.
true. And I think, that's why for some people, emerging markets can be really good options because, you can bring all those pieces of that puzzle together.
Mhm.
It can obviously be really good.
Yeah,
Really,
yeah.
really good in that
Yeah.
respect. So, okay, so that's what it is and why you might consider it. So what do you need to actually identify an emerging market? That's
Oh,
probably the big question on,
please tell me.
yeah? Please
Tell us.
Tell us.
Yeah, the listeners want.
Listeners?
They want to.
You and the listeners. All right. So I guess the one thing I want to convey is that like there are lots of ways to do it, but these are some of the things that we do at Atlas, right? It's something that I emphasize to my team, and it's things that I do personally, and it's obviously worked out really well for me personally and the business and the team. So I'm just trying to share my perspective from that view, right?
Mhm.
But the big point I want to make is there is no, I feel like I say a lot on our show, there is no silver bullet to this, right? Like it's not, you just have to do one magical thing, right? It's really unsexy and really boring. You have to do all these things every single day,
Mm-hmm.
and you have to repeat the process over and over and over again. And that's the unfortunate reality.
It's called life.
It's called life. Wow, that's
Profound.
I was feeling, oh man, you took my word. That's so profound. That is so profound, right? But the reason I say that is because some people might hear what I'm about to say and be like, oh man, like he's trying to keep secrets. It's this, it's that. I'm not. I promise I'm not. It's literally as challenging and as simple as what I'm about to say, but like it's not sexy.
Mm-hmm.
That's the hard part, right? So what do you need to do to identify an emerging market? The first thing, and I would honestly say one of the most important things, is you have to read broadly and you have to stay up to date with the news. Constantly.
Yeah.
So I can tell you, I try and read, I got the news app on my phone, on my iPhone, I got the news app. I pay for AFR, like the Fairfax media, the other one, I can't remember what it is. What you got? Fairfax and News Corp, right?
Yeah.
I pay for both of them. I have access to like American sources like Wall Street Journal. I have access to like Business Insider, like all of it, right? I have all of it. And the reason is that I reckon I would spend like an hour to possibly 2 hours a day reading the news every day, right? And it's not necessarily like I wake up in the morning with a coffee and I sit there at the table and I'm reading the news, right? Like
then you're an old man.
Yeah. It's not, do not make me start on this age conversation again with you, my friend. My
I
young
go to the
Brazilian
gym
friend.
at 5 a.m. or at night.
Yeah.
So there you go.
There you go. I'm usually there at 6:30. I'm usually there at 6:30.
Beautiful.
But I do it throughout the day, right? Like I might, on the way into work, I might, read a bit then, right? At night when I'm getting into bed or I'm sitting around watching a bit of TV or whatever, and it's sort of just background noise, I read a bit then. During the day, between meetings, I read a bit then, right? But I would consume, I reckon, an hour to 2 hours of news every single day. And the reason why I think it's so important is because you start to really understand the nuance of certain elements of both domestic and international affairs. And I know that might sound really dramatic when we're talking about emerging property markets, like why is international stuff important? It's important because that can give you clues. Like, has China just announced something that means that they now need more of something else, which means that the only place that they do that is manufacturing in a certain part of Australia, and then that place is already a pretty big town / city, but we now know that they're going to get an influx of different stuff because of that, right? Or did the Australian Defence Force just announce that they're about to build, 100 new vehicles every year for this thing, and the plant that they build at is in another place, right? So that's now going to explode, or are they is something here going to happen or something there, right? Like, it is so important. I cannot stress that enough. And then you get the more specific news, right? You get the news of like, supply issues or demand issues or this or that or that. So you do have
your daily update.
Exactly right. Like you get property specific, but you get economic, right? But you have to read, and not only is it going to help your knowledge globally and domestically, but it's also going to actually help you to understand what trends might be starting to occur in property markets, right? Yeah. But it's not an overnight thing. It takes years. Like I've been reading the news for I've been reading since I was a kid. I've been reading the news, for years and years and years with this lens, right? So now it's different because I can think of something that I might have read, like it obviously doesn't spring to mind. I don't have photographic memory, but you know what I mean? Like I can read something. I go, oh, I remember last year I read an article that was kind of like that, and now I'm seeing this, and now it's it makes me think of something else, right?
Yeah, the evolution.
The evolution, exactly right. So that's the first one, right? Is reading broadly and staying up to date with the news. The second part is you need to have access to a full suite of data, right? Now,
yeah, this is bang on the hardest one, I think.
And you know what it is? It's the most expensive one.
And that's why.
Yeah,
absolutely.
And I put this out, right? Like, yep, there's lots of free data out there, and a lot of the data is actually pretty good, right? It's pretty solid. But here's the thing, right? If everybody has access to that free data, and let's say that a lot of people who are trying to invest in property use that free data, if it was so good, why is it that most people struggle to invest in property? Why is it that you might think that if you're doing what everyone else is doing, that's somehow going to magically make you better than the majority, of which the majority never really achieve financial freedom, wealth, property success, whatever you want to term it. Like, why would you be able to achieve that, right? And to me, the answer is you can't. You need access to other sources, right? But it's damn expensive. I can tell you, we spend over 6 figures a year on data.
Yeah, well, I don't doubt it.
Over 6 figures. I spend more than some people get paid before tax in an entire year.
Wow,
just
that's
on data.
A lot. Yeah,
right?
That's a lot. That's a lot. Yeah.
But it's certainly not about trying to measure data prices here. It's about what it gives you, and what it gives you is it gives you access to so many different pieces of information and data that you obviously need the knowledge and the skills to be able to interpret it, because otherwise, it's, I think I've given the analogy before, right? Like two doctors, two surgeons, they go to the same school, they get the same degree, and they both can do knee surgery, and yet one surgeon is just better than the other, and yet they've got access to the same information, the same tools. And the moral of the story is that ultimately some people are just better at what they do than other people, despite having the same tools or information at their disposal. Same thing with this. You could be just somebody that's listening in, and you could go, I'm gonna spend 6 figures on data, but I'm gonna go spend 10 grand on data. If you don't know how to use it, it is just a waste of 10 grand.
Yeah.
So,
or if you don't have the time. because
Well, you don't have the time.
that's usually the case as
Exactly
well.
right.
Money and time.
Money and time. Exactly right. So you need to have access to that data because that's going to help you to build a picture. It's going to help you build an understanding of trends. It's going to help you understand, oh, well, the last time this place did it, what did it look like? What do other places look like from a data point of view before they maybe change from being an emerging market into a market that's moving along? So there's a lot of factors that come out of it. But if you don't have access to the information, and also you can't manipulate it the way that you want. And I don't say manipulate in the way of like you're doing dodgy stuff with the data to fit a narrative. I mean it in the sense of like
getting dashboards done and stuff like
yeah,
that.
whatever it is. Like
Mm.
if you go on to like let's say realestate.com and you see a data point, well, you can only see the data point, but it's very different when you've got the raw numbers that make that up. And you can go and take those numbers and use it for something else and use it for here and use it for there. Being able to actually like physically manipulate that data to use it for things that you want to do with it rather than just having to sit there and read it and that's it. You can't really touch it. You can only see it.
Yep.
Very different as well.
Much like a pivot table.
Much like,
Just,
oh,
just-
man, pivot tables, God, the
Mm.
amount of pivot tables we have, insane, right? So that's number 2, right? Access to a full suite of data, right? So what's number 3? Number 3 is that you need that on the ground perspective.
Equally as important, I think.
I could not agree more,
Yeah.
right? Like data is brilliant, but data, the ones and the zeros, it's always lag. Like best case, like we get some of the absolute best data in Australia that you can for property, like property related data, right? That data is still at best 4 to 6 weeks in lag
Mhm.
compared to the day that I get it, right? So it doesn't sound like a lot, but it can be, right? It can be a lot.
Oh, absolutely.
But if you're on the ground, an agent can tell you, if you call an agent on Monday, they can tell you on Saturday, like, I saw this many people at the open home. I
Mhm.
saw this, I saw that, right? But then the data, whilst it's probably going to have a lot like more integrity to it, and it's going to be a lot more, in depth. I'm not going to get that for another 4 to 6 weeks, and that's
Mhm.
the best property data, right?
Mhm.
So, like, don't get me wrong. I don't want people to think like, oh, property data shit, or like those guys don't have good data. We have the best data you can. The thing is that when you've got to collate data from all around Australia, and you've got to fact check it, validate it, clean it,
There's lagging always.
adjust, like do all that, like it there's going to be some lag in it, right? And
Yeah.
everybody knows that, right?
No, but on the ground perspective is key. It's like taking someone the first time to Canberra and they start talking to an agent and they ask for Jarrabombera. I've heard it.
I like that you bring up Canberra because I was living in Canberra when we first met each other. It's
True,
yeah.
true, very true.
Yeah, the old Jerrabombra.
Yeah.
Exactly right.
Or
But,
Manuka.
yeah, it's I got to be honest. There's still a part of me that doesn't agree with it because you got Manuka honey.
Yeah, well, that's the problem.
I know.
Yeah, that's
But
the
then
problem.
it's Manuka in Canberra.
Yeah.
Right? And you sound like an idiot when you say it a different way, right?
Correct,
But
yeah.
then you got like Coogee in Sydney.
Mm-hmm.
Then you got Coogee in WA.
Yeah.
All right.
Yeah.
So anyway, but on the ground is so important, right? And it's really important as well because like you might be seeing data that says it starts to tell a good story. You also know it's lagged, but like being able to actually be there yourself and see things and understand a city and understand what's going on, but then also being able to like talk to the agents and do all that. And you'll hear like agents will say, if you ask the right questions, that is like, yeah, like man, it's like last month, I reckon we were getting maybe 10 people, 15 people through an open home. This month, and let's say we're now at the end of the month, so it's been 2 or 3 weeks of it, man, this month, like we're getting 30 people in, like every single time. Like it is kicking up like massively, right?
Mm-hmm.
And that kind of perspective is so valuable. And if you've got those relationships, you can hear that from one person to the next person, to the next person, to the next person. It starts to build that picture.
Mm-hmm.
And it's really important, especially for emerging markets, because, emerging markets have an added level of risk.
Mm-hmm.
And it's that information that really helps you to make a more informed decision, I think.
Yeah.
So on the ground perspective, and then I think the final thing that you need to identify an emerging market is you need to remain unemotional, okay? And I know that can be really hard to do, especially when you are spending so much time and commitment into trying to do something, but you have to remain unemotional. And what I mean by that is like, You can't change the data. You can't, like, yep, you could ask questions to an agent to lead them to a conclusion, but it's not in your best interest to do that, right? You need to be unemotional. And if you go through the whole rigmarole of thinking that you've identified an emerging market and you kind of get to the end of it and then it just pieces aren't lining up, can't be so emotional that you go, nah, you know what, I'm just going to ignore that. Like, doesn't
looking for
matter.
ways to make it happen.
Exactly
make
right.
it
That
fit.
confirmation bias. Like, it's just,
Yeah.
you can't do it. Like, you have to remain completely unemotional, because if you don't and you take on that emotion and you jump into an emerging market and you do it wrong, like, let's say best case is the market kicks off, it just takes longer to do it. So at which point you've had opportunity cost, but you probably won't have a financial impact long term. But if you really muck it up and it doesn't even kick off, you're then going to have opportunity cost plus probably a genuine financial impact of it.
Which you don't want.
You know what? I don't want that.
Yeah.
And I don't think you want that either. And I don't think anybody
Absolutely.
listening does want it. So I think you're bang on, man. I think you're bang on. So that's what you need to do to identify an emerging market. So you need to read broadly and stay up to date with the news. You need access that full suite of data, as well as the knowledge and the time to be able to utilize it properly. You need that on the ground perspective, and you need to remain unemotional, right? So I think the final thing to cover off with you before we call it quits for the day, call it stumps, is what are some of the risks of an emerging market? What are some of the risks? What do you think? What do you think the biggest risk is?
Well, timing the market is one of them. If you time it wrong.
I couldn't agree with you more.
Because I think it's the opportunity cost, like you just mentioned.
Yeah.
Like, if it might be a great investment in 20 years' time.
Yeah.
But then you've waited 20 years to start making a buck.
Absolutely.
Is that
Yeah. Well, I'll give a real example of that. It wasn't quite 20 years, but it was longer than what most people wanted. Brisbane in the sort of 2010s. Like, Brisbane really didn't do much for the 2010s. So if you were somebody that bought into Brisbane in the early 2010s, like let's say, 11, 12, 13, Brisbane didn't really start to do anything till we sort of got to like the 20s. So you could have had capital tied up there for the better part of a decade. And obviously it's okay now, and it's come good since. But the thing
long term, big cities will do well.
Yeah, well,
eventually,
long term, almost anywhere it's gonna even out. But the difference is that if you put money in 2011 and you didn't get movement until 2020, 2021, of which that wasn't even the full swing. So let's say it's actually 22 by the time you got through like a really good chunk of that growth. You've had capital tied up in that market for 11 years. Yep, you're now maybe back to the point that you should have been. But over that 11 years, somebody that invested smarter in a different market has probably bought into a market let's say 2 or 3 years later, has been able to pull that equity, buy another property, go into another market. Another 2 or 3 later does it again, and another 2 or 3 years later does it again. By the time that same 11 years elapses, they might have built a 3 or 4 or 5 property portfolio compared to that Brisbane investor that Brisbane investor's Brisbane property and that other investor's very first property have probably proportionally grown the exact same over that 11 years when we get to the end of it. But because that emerging market took too long and the market, didn't operate properly or the way that they wanted it to, the opportunity cost has been another 3 or 4 or 5 properties. So Matt, timing the market is so important, because that is the biggest risk. Is if you don't do it right and you kind of, you don't follow these steps properly, you could be in a market that either takes too long to kick off and you have that portfolio opportunity cost, or B, it just doesn't. Honestly, it doesn't ever go, but it effectively doesn't really ever go. You know. So, Matt, totally agree. Timing the market. I think a second one, which is a little bit closer to home for you, is that equity release side, right? So if you're really looking to build a portfolio and the market doesn't move, especially because you haven't timed it, and the whole idea is, well, the hardest property to get is your first one, because then your first one should grow, and then you can go either combine savings or equity to get into your next one, or maybe just equity. But the property's value should be growing a lot faster than what you'd ever be able to save. You might not have any equity there, which means you've got to save again for your second property. And for a lot of people, or wait. And for a lot of people, like at least on the savings front, like, man, that might have taken them like 5 or 6 years to do it the first time. And now they're going to have to repeat that. So like suddenly you've got this massive handbrake on your portfolio. So we got that. I think the final big one that I thought of was your exit strategy. So if you're in an emerging market and you need to get out for whatever reason, if that market isn't really performing, it's going to be a lot harder for you to sell it, let alone selling it to still make a bit of money, even if we exclude opportunity cost. If you add in opportunity cost,
if you need cash out quickly, that's the problem.
Exactly right. So, like that is, to me, that is another sort of risk of an emerging market is that, if you're in super early and not much happens and something goes wrong, it's probably going to cost you time and money exiting that. And if you need to get out, you might not have the 4 or 5 or 6 months it takes to sell the property.
Yeah, like emerging markets are for everyone.
Exactly right.
So you just got to understand where you are, your risk profile, things like we've discussed before.
Yeah.
Before you make that decision.
And I think that I really like what you're saying there, because it depends where you're at, right? It depends where you're at in your portfolio. It depends on your financial means. It depends on your risk tolerance. It depends on so many different elements. And, if you don't understand that properly, not only might you buy poorly, but then you might also buy something that's not even right for your circumstances anyway, So I think that for me, emerging property markets are very valuable, right? Very, very valuable. You just have to do it right.
Yeah, with your knowledge, I couldn't agree more.
Oh, shucks.
No, but it's true. Like when it's hindsight's a great thing. Looking at it, it's amazing if you know what to look for, right?
Yeah.
But some people they don't have the time, they don't have the resources.
Yeah.
So yeah, maybe it's a good time to talk to Mr. Lachlan Vidler.
You give me a plug, are you?
Oh,
give me a
always,
plug.
Always.
Oh mate,
always.
you would have to be one of my biggest fans. So I appreciate.
Well, it's the results. It's the results we get, right? So if the results speak for themselves,
it absolutely is. It absolutely is. Well, I think that's everything we want to talk about today. Emerging markets, right? What they are and why you might want to be there, and some of the things you need to do to identify it, and then also to balance the conversation. What are some of the risks associated with it? So I think we had a pretty good chat today.
Yeah, I like it.
I know. Last episode we gave ourselves a critique. We did this well, we did that well. Like a real match day review. But we probably don't need to do that this time around. And
but it was a good episode.
It was a good episode. Yeah. I like that. Well, let's leave it there then. I think guys, if you are looking for that finance help, right? We're starting to get into the year. We've got to start making moves, right? It's no longer that New Year glow anymore. We're starting to get well into the year. If you need help on that finance front, make sure you go and have a chat with Will and his team over at Aussie Newtown. He's a platinum broker. It's a platinum store. Platinum service is what I hear comes out of that place. I've seen it myself. So make sure you go and have a chat with them, because they are damn good at what they do. And we're now into the new year. So you've got to start making your moves to take advantage, especially before we see everything kick off even harder than it already is, with impending rate cuts, as we'd like to hope that there are going to be, and as we think that there should be. So go and have a chat with Will. And then likewise, if you need help on the property front and you're ready to finally take control of your journey and you want some help with it, and you want to come and work with the absolute A team, who are 3-time REB finalists this year for the big real estate awards, Buyers Agent of the Year, as well as Innovators, come and have a chat with myself and the team. We talked a lot about full suite of data. Come and work with us. We have over 450 million data points in the research platform that we built from scratch. So come and have a chat with myself and the team. We'll be able to help you out and help you start or continue building that portfolio. But guys, until next time, make sure you give us those 5 stars, and we can't wait to be back with you soon.
This is a Piccolo podcast production.